Hello traders and welcome to another video review. Today is Tuesday, October 24th, 2023. Let's find out what's going on the Forex economic calendar today. This calendar looks pretty busy, but we are going to start with the early London session. Some data had been published overnight, as you can see, or during the early London session. General consumer climate disappoints the participants with the reading of minus 28.1, which is way below the forecast of minus 26.6 and way below the previous reading. Data from the UK most likely are better than expected. Average bonus earnings index is rising, climate count change is rising, employment change is minus 82,000 only, and the employment rate drops from 4.3% to 4.2%. We still have the manufacturing data and services data from France, from Germany, and there should be some from the UK as well. So those data are scheduled between 9:15 and 9:30. Then we have the manufacturing PMI data, composite PMI data, and services PMI for the whole Eurozone. This data are scheduled for release at 10 a.m. We got some speech from the Reserve Bank of Australia Assistant Governor Bullock at 10 o'clock. Then we got data from the UK, labor productivity, composite PMI, manufacturing PMI, services PMI, and the industrial trends orders. All of this data are scheduled for release at 10:30, and the industrial trends orders at noon. So London session is gone. Now the New York session. We got new housing price index data from the Canada, scheduled for release at 2:30. At the same time, we got some speeches from the ECB President Christine Lagarde. Then we got data from the US in form of the PMI, of course. What else? Manufacturing PMI, composite PMI, and services PMI. All of this data are scheduled for release at 3:45. Then at 7 o'clock, 2-year note action, and at the end of the day, 10:30, we got API, weekly crude oil stock change data. So pretty much busy day, plenty of data from the PMI, composite PMI, manufacturing PMI, and services PMI countries like France, Germany, and UK, and Eurozone. So it's worth to take a look at this data, and of course data from the US in form of the PMI might be important as well. So without any further ado, let's take a look at the euro dollar first. Euro dollar just hit the level of let's say 100%, the level of let's say 1.0687. This level is the 100% of the Fibonacci extension of the length of the wave A measured from the bottom of the wave B. So basically bulls hit the first target for the ABC correction to the upside. The next target is eventually located at 1.0806, and this target is a 161% extension of the wave C to the upside. It's still possible to hit, but before the bulls will do it and extend this correction, we need to break above 1.0737 technical resistance, and let me just zoom out, and there is one more level here, 1.0769. Nevertheless, it might not be that easy, this extension to the upside, because we got the extremely overbought market conditions right now on a 4-hour chart. The RSI indication is 75 points, so we should see some sort of that pullback towards the highs of the wave A, located at the level of 1.0642. So this is the movement to the upside. We are trading above the 150 periods moving average, looking good. Nevertheless, it's only ABC movement to the upside. We should see some sort of the pullback soon. So that was the euro dollar. Let's find out what's going on with the pound, because as you can probably see, there's plenty of data from the UK scheduled for release as well. And on the UK market, we are still trading below the technical resistance located at 1.2336. So this is the technical resistance, and this is where the market is heading right now. Maybe, just maybe, we might be concerned a little bit about 1.2274. which is the other technical resistance, but nevertheless the swing high is the way important level than the other one. Now the technical support is 1.2224. This is one of the technical support. There is one more, of course, technical support we can place on our chart, 1.2218, and the last one is, for example, 1.2210. So pretty solid technical support zone. Maybe it will act as a demand zone, okay, for the bulls, just above the 50 and 100 periods moving average, but the market is about to hit extremely overbought conditions. So maybe if the data will be good, we can have a spike towards 1.2336, the highs here, and then most likely the market will pull back because the market's conditions are right now heading towards the extremely overbought levels. So the outlook is bullish, but we should expect a pullback as well. Only a sustained breakout below this zone here, below the demand zone, might change the short-term outlook to more bearish, especially if the fundamental data will trigger some sort of the movement that is not in favor of bulls. All right, so that was the British pound. Let's take a look at the US dollar to the Canadian dollar. We got some data. That was yesterday, so maybe US dollar to Japanese yen. US dollar to Japanese yen is showing us some sign of a weakness. Why? Because there is a swing high located at 150.17. This is very nice number because it is a round number, 150. Okay, so there's the technical resistance and the swing high. The recent highs was made at 150 exactly to the pip, and since then we've been consolidating in a very narrow range. This range has not been basically in favor for bulls, despite the fact that we have very nice lower wicks here and here, but right now the bears managed to break below this very tight range. 149.68 is the intraday technical resistance, and the other levels, of course, for the support is the low of this big wick here, 148.81. As you can see, momentum is in favor of bears. We moved way below the level of 50. Right now there's 33 points only on the RSI, so we should expect the market will go lower, will go below the level of 149 to test 148.81 as soon as the dynamic support from the 100 periods moving average, located now at 149.34, is violated. So it looks like we got some sort of the topping pattern here on the US dollar to Japanese yen, which means that this movement to the downside might be extended lower. We got our levels here. In case of the, let's say, in case of the further extension, of course, the next important technical support is located roughly around 148.18, and maybe a little zone can be made here, 148.28. So that's a 10 pip zone, not a big deal, but kind of an important zone just before this low here, the big candle, the big 4-hour candle down wick low at 147.39 is tested. This looks bearish. This looks bearish, guys, so please prepare for spike to the down side. And last but not least, let's take a look at the Bitcoin. Why? Because the Bitcoin is rallying above $35,000. So right now, if we switch to daily, we should easily see that the market of the Bitcoin is rallying, and this movement to the upside is being continued. Where is the next target for the bulls? Let me just find out this level. Roughly, I would say somewhere around 35,000, of course, because we got this this zone here. Let's say the technical resistance one is roughly around 34,000. 35,600. That's not this one. Let me just make it clear. There you go. I want this one. So that's the level 32,897, and this one is 54,327. Very nice zone, but violated. So it looks like if we extend to the upside, there is last chance for bears, 30, let's say 7,157. That's the last zone, and we are just entering this zone right now. So let me just zoom in a little bit. Yeah, very nice candle, a very big candle in terms of the spread, but 84 points is definitely the extremely overbought level. So we should see soon a push to the downside, some sort of the pullback towards 31,790. So this is the technical support in order basically to test it. So those two levels here will act as the technical support, 31,044 and 31,780. Very important levels. They cannot be violated for this market to move higher towards the 37,000, the technical resistance at the 37,000. Right now it looks like there is some of the supply coming into the markets. It is much more and much more better visible on the daily, on the 4-hour time frame chart, on a lower time frame chart. Nevertheless, the daily is one of the most important charts, so we can easily identify the nice upward swing. Big daily candles means that this market is prepared for another rally to the upside as soon as the pullback is completed. From the lows of the September, we already done 41%, right? So within just roughly around, this is the September 11, so roughly around 4, 5, 6 weeks, in 6 weeks time we got 41% gain on the Bitcoin, and there is a potential for the Bitcoin to do even more. So this is my analysis of today's markets. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.